Yo, what up, guys? Welcome back to HPT. Coming in live and hot. Let's talk about some moving averages. Moving averages are the absolute best thing in the entire world, especially as a trader. And in this session, we're going to talk about why. Give me a second. Well, the key, right, to trading, in my opinion, is not to overthink. Overthinking will cost you way more money than you're ever going to make. Hold on. Give me a second. Give me a quick second here. I want to just post this so that the team can come check it out. Moving averages changed my life. And it's not necessarily moving averages that changed my life. It's how I use moving averages that changed my life. Hold on. I'm doing a trade recap. Bam. Bam. Let me throw that out there. Close. Okay. Moving averages are, so first of all, one of the key differences that you're going to see over here at High Performance Trader is how we utilize moving averages. And I think it's important to talk about because a lot of people get moving averages wrong. Okay. We use moving averages in a way that, I got to be a little more clear on why I got so involved and attached to moving averages. So moving averages, a lot of people will look at this chart in front of you and I'll tell them, I'm like, okay, yep, on this chart, I have the 5, I have the 20, I have the 50, and I have the 9, right? So there's 4 main moving averages on the chart, and then I also have the 1 hour 9 displayed on the lower time frame. Okay, so a lot of people are like, okay, cool, yeah, I use moving averages too. I'm like, sweet. Now the reason why I got so obsessed with moving averages is because I literally used to full tilt, full retard, blow my account constantly. Okay, like I was the king of blowing accounts. I blew more accounts than most traders. And the thing is like, when I was blowing accounts, it was really bad because I literally made 50 grand a year. I supported my family. My wife didn't work. I have a 4-year-old daughter. So like when I blew my trading account, it was bad. Like it literally, I couldn't buy food. So what I did was I started diving deep and more into my journal to figure out why I was actually blowing my account. And the main reason I found was I was jumping all over the place. I wasn't sticking to one strategy whatsoever. I was literally all over the place, back and forth. And I couldn't find any consistency with the way I got in and out of the market. So moving averages really gave me that solid way of staying patient. It helped me understand, right? Like if nobody's defending the moving average, there's no reason to get in the trade. So I started to use moving averages a bit differently. What I started to do was actually use them to identify who was in control of price. And that's what we're going to be talking about today in this trade recap. Because it's super important to talk about. Most of us are all over the place. We're not sticking to one strategy or one approach. We're literally just firing. Boom, boom, boom. Get in, get out, right? And the result of that is blown accounts, and no money's ever being made. If you make any money, you end up giving it all back. And what you have to ask yourself is, why does this keep happening? Like, why are we all over the place? Why are we not sticking to one strategy? And it's information overload. So moving averages actually calmed me down, right? Instead of being in front of the charts, being like, oh my God, oh, it's bouncing off VWAP. Oh, it's bouncing off orb, or oh, it's a double bottom, or whatever it may be. I'm going, how's price respecting the moving average? Is it respecting the moving average? So moving averages really was one of the first tools that I started to use to keep me from going full massive retard on the chart. And that is key. Okay. Like if you're a day trader, you know what it's like to blow your account and feel this big. Okay. Every day trader's done it. But what's important is that we stop doing it. Okay. Like it's okay to make mistakes. It's okay to be on the wrong side of the market, but it's not okay to keep making that mistake. So that's what happened to me. I was literally, like I said, I was making like 50 grand a year and I was blowing 15 of it on the market. So it came to a point where I'm like, dude, we're not going to be trading much longer. Like, if we don't figure this shit out, and this is the thing, I'm so retarded. Like, I'm manic. Like, I have to figure it out. Otherwise, like, I will lose everything. I'll lose the house. I'll blow an account before buying food. Like that's who I am. Trading changed my life. It got me off drugs. It got me in shape. Like if trading didn't work, I was dying. Like that, like that's why I became so damn obsessed with moving averages and obviously critical levels and whatnot. But all right, let's talk about the trade. But that's a little background of why I felt so in love with moving averages. Another thing I want to say real quick is a lot of, HPT. I love you guys. Lance, Todd. Todd really helped me as well. HPT's been around for like 2.5 years. Todd was our first member. And Todd, my boy from Louisiana, we've had, Todd, how many sessions, how many webinars have we had? Over 2.5 years, at least 100. And in each one of those webinars, we talk about moving averages. And what we've come to realize is moving averages keep you in the now moment. Okay? Like, think about it. We are in an environment, right? The stock market, we're in an environment that is insanely unstructured. Okay? Like, price going up, price going down. Like, there's nobody telling you to get in. There's nobody telling you not to trade. There's nobody telling you to trade. Like there's endless freedom here. Okay. So it's a recipe for disaster. If you don't have a tool that keeps you grounded, you are going to be all over the place. This is why I try to explain to everybody, like, I don't care what strategy you use. Just only trade that strategy, because if you're strategy hopping, there's nothing grounding you. Okay. Like we're not built to have massive freedom. Okay. That's why most of us go to work every day. Most of us, we need rules. Like your ass needs rules. Otherwise you'll go full retard. You won't know what to do. You'll be like we need structure. I'm not ashamed to say it. I need structure. Like if we didn't have laws, like there would be massive raping and pillaging. Like us as humans, we need law. Okay. That is the primary reason why so many traders fail, because in the stock market, there is no law. There's no rules. It's just you and price, baby. And there's all this opportunity. Okay. There's literally endless amounts of opportunity. There's people making millions of dollars. There's people making $10. There's just, this market is going up, down. Like, so we're so blown away by it, right? Like, oh my God, like there's tons of opportunity. I want to get in. And what happens? You go full retard and blow account after account after account. And you're like, dude, I didn't even follow my trade plan. What the heck, right? Like, yeah, that's the story for 99% of day traders, right? Well, that was my story as well for many, many years, until I was like, okay, Josh, you're either going to figure this out or you're going to go without food and you're going to lose everything. So basically what I did is I redefined what I called opportunity. Okay. We have to go, all right, I'm looking at this chart. I need a reason to pull the trigger. And now this webinar is about moving averages, so I'm going to stick to the script. Today we took multiple trades. I wasn't able to get the screenshot of my overall of how both But overall, we did pretty good today. And what I want to talk about is why I actually pulled the trigger and how moving averages helped me do that. Okay. So we took 2 trades. I took a long play right here and I took a long play right here. Okay. So what I want to talk about is the 20 EMA. We've been talking about the 20 EMA a lot. And I don't want this just to be about the 20, because you might use the 21, another trader might use the 12, right? Like I really don't care what moving average you use. The importance are the concepts and principles that represent the moving average. Okay. So a moving average is a tool. It's a statistical tool, right? Meaning its value is based off statistic, which is the average price of the commodity over a period of time. Okay. So a simple way to say it is a moving average is literally a tool I use to identify strength and weakness. I use it to identify healthy and unhealthy. Okay, this is the important. Okay, this is what you need to take from this webinar. We need to find healthy trends, and we also need to find unhealthy trends. Okay, example. This morning, price opens up, and we rally here into 640. Okay, 640 was all-time high. Everybody and their mother was expecting a short play. Okay, and obviously, I don't blame them. Look at it. We're ripping into all-time high. Hold on. All right, can you guys see this? There we go. We're ripping into all-time high, right? What the heck? Hold up. I screwed it up. Help. We're ripping here. What the heck? Into all-time high, okay? And what happens? We start to reject. Cool. Now, the old Josh would have been getting in short immediately, right? Oh my God, double top, right? This thing's going to sink, right? That's what the old Josh would do. But now I understand the moving average is telling me that this is unhealthy. I do not want to be getting into this, okay? I need to see a healthy trend before I engage, okay? And this is, I'm going to give you guys a little sneak peek here, actually. If I go to Google, I'm going to show you guys what I teach in the mentorship program, right? I'm going to show you guys the curriculum. So when somebody joins HBT, we have a session, okay? And in that session, I explain to them this document, okay? In this document, it breaks down the 3 main goals for you to become a good day trader, a consistent trader, right? A trader that doesn't trade like a complete retard. And the first goal is identify healthy and unhealthy price action, okay? Now, the way we do this is by using our 3-step approach, right? And now step number 2 of that approach is what we're talking about right now, is moving averages. So yes, you are getting a supply rejection here. Sellers are defending all-time high, but this isn't what I call a repeatable entry. Okay, so this is not healthy. I do not want anything to do with it. But if I get a green bar to get ignored, meaning this candle here blows the bottom of this candle, then I will enter short. Okay, but we didn't get that. So what we do? Nothing. It's not our edge. When your edge is not present, you do nothing. Okay? Now, this is the beauty. When you're doing nothing, you know what you're doing? You're saving money. You are not blowing. You're not going full tilt. You're not blowing your account. You're not wasting your grocery money. You're not letting your family down. You're not proving everybody that thought you couldn't do it right. Okay, when you're sitting on your hands, you're proving them wrong. Okay, like this is how serious I take it, because if I don't take it this serious, I'll screw up. Every time I break character, which means I get into a trade without criteria, I'm literally letting down my family. Like I'm not doing what I'm supposed to be doing. Okay, like that's how serious it needs to be. So I make no trade. I don't care if I miss it. I don't care if this thing sells off If my entry doesn't pop up, I don't take it. So not only, hold on, guys, stay with me here. I wanna make this a little more visual. Just got to use this tool. Hold on, give me a minute. Okay, I got it. So not only am I not trading, but right here, we are saving money. There's no criteria. There's nothing there for me. There's no trade. So I don't want nothing to do with it. So now price comes up in the previous day high. Cool. We're not really getting an entry to the upside. But instead of going, oh my God, I'm getting no entry, you know what I'm doing? I'm taking notes. I'm reading context. And the way I do that is with my moving averages. So let me whip out the 1 hour time frame. So if you guys want to understand the context, just look at the 1 hour. Like, that's it. 1 hour started to look like this. Okay. Now look at that 1 hour. What do we got, guys? We got a moving average cross right here, right? This is a, right here. Moving average cross. Okay. Cloud is going from red to green. What else are we getting? We are getting a red bar to be ignored. What does this mean to us? This right here means somebody is dominant. Does this mean sellers are strong? No, absolutely not. This right here means buyers statistically have a higher chance of pushing price up. Okay? That's what the data does for us, right? Like, that's why we study this 3-step approach. Like, every time you're seeing a chart pattern, guys, that is a statistical pattern, meaning there is a higher chance of one thing happening over another. That is your edge. Okay? Don't make decisions based off emotion. Make decisions based off what the tools are telling you. That's where we fail. Because we are emotional creatures. We like emotion. We like it to be fast. We like to capture the reversal. We're hoping that we catch it before everybody else because we want to feel important. Well, stop trying to feel important and start trying to make money. What is working? That's how I was able to like actually start making different decisions. Is I was literally going through my journal and I'm like, holy shit, I've literally lost so much money. I've blown so many accounts. What am I doing? This shit ain't working no more. Emotion ain't cutting it. Like, it's not working. Talk to everybody on HBT that's locking in consistency. They're not making decisions based on emotion. I promise you that. They're making decisions based on criteria. So this is what the market looked like, and I'm like, damn it. One thing I want to point out here, I didn't take this, and I'm actually wasn't happy that I didn't, but I just want to show you guys something. Chart on the left. Price couldn't sell off, right? We couldn't make the low. We reverse. Watch the 2-minute here, okay? Rally. Ping, right here, okay? The market is speaking to us. The market has its own language, okay? The market speaks to you. Your inability to see it, right? Because your perspective is like, oh, I got to trade VWAP. Oh, I got to trade, Orb. I got to trade this. I got to trade, oh my God, my strategy, this. You're not hearing what the market's trying to tell you. Like this, like, and I could speak on this because this was me. I would literally watch these charts until like longer than anybody. I'm an obsessive person. But there was so much information, I missed what was actually important. What's important isn't special. It's just clear. Look at this moving average. Bam. 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 Look at that. You got 3 candles in a row. Not one of them could close below the 20. My boy Todd said it the best. He said, I don't always trade the 20. No, what did he say? He said, the 20 doesn't always get respected, but when it does, I'm trading it. Like, it's not about it being the perfect moving average. It's about being clear. I can, in the present moment, identify that buyers are in control. Boom. My edge is present. Like, I don't care about orb. Like right now, the only thing I care about is that buyers are holding that moving average. And if I'm to get in long, my risk literally goes right here. I have no risk on this. None. Takes off. When do you get in, Josh? When the RBI pops up. I didn't take this trade. I wish I did. It was beautiful. But the moving average principle still applied. Okay. Like it's either going up or it's going down. How do we know which way to trade? The moving average. Every time. The moving average is the most effective tool. If I could only use one tool, it would be the moving average. And once again, right? Like it's not, you can't just don't go in. Now understand what I'm not saying. I'm not saying tomorrow only trade the 20-minute 20 or the 2-minute 20. That's not what I'm saying. I'm saying use your tools to understand the context. Look at the 1 hour. Okay. Context means 1 hour. Drop to lower time frames, identify opportunity. Okay. So let me pull up the Discord. I'll show you guys exactly where I got in long. Oh, I love moving averages. Look at this trade we took here at the end of the day, dude. This thing was cooking. She was cooking. It was a fake out. But look, so this is another one I took. Well, I was respecting the moving average. Look, couldn't close. Boom, 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 boom. Got myself an RBI. I'm in it. Moving average, RBI. Bam. That's an edge. Clean risk. But here, ready? So I got into the market right here. 11:56 a.m. 11:56 a.m. And anybody wants to join our team, click the link below. Level the fuck up. HPT is the best Discord in the world. And I'm just saying it because we're the realist. Okay, we're the realist. We are, not just becoming great traders, but we're redefining our life. We're becoming the absolute best version of ourselves. So check out the links below. So right here, 11:56, I'm hopping in the market long. All right, Josh, why? Well, let's talk about it. That means right here, I got in the market long. What's that 2-minute 20 doing? Let's see. Respect. Okay. So we have 3 different times that we're respecting that 20. Bam, bam, bam. Now, this is what the old Josh used to think. Oh, the next time it's going to reverse. I know it. You don't know shit. Listen to what the market's telling you. Don't listen to you. Listen to what the market is telling you. If the market's respecting that moving average 3 times, get ready for a 4th. Okay? Like, don't be the retard that thinks it's going to do what you want. Okay? The market is not going to do what you want. It's going to do what it's already been doing more often than not. So, if, how could I say this? Okay. Every morning the sun comes up in the east and it sets in the west. Okay. I know this is a really, not the best analogy, but it wouldn't be that smart to make a bet that the sun didn't come up tomorrow, right? I mean, more often than not, winter comes after fall, right? You see what I'm getting at here? Like the law of large numbers tells us to bet on what happens most often. Okay. So when that moving average is being respected, don't be the guy. And once again, guys, I was the guy. I was the king of predicting markets, even though I never made money doing it. Okay. So don't try guessing the high is what I'm saying. So it's respecting the 20. It's respecting the 20. Let's whip out that 5 minute so I can give you guys a little bit more here on why I got in the market. 5 minute being respected beautifully. And I've also been using the 4 minute time frame. I haven't rolled this out to the team yet, but guys, the 4 minute time frame is very effective with our strategy. Very. Look at the first RBI right here today on the 4 minute time frame. Bam. RBI, retest, rally. Go figure. Okay. So once again, I haven't rolled this out to the world yet. You guys are actually the first to hear it from me. But we are doing massive studies on the 4 minute. The 4 minute time frame is very effective. It's obviously 1 minute below the 5, but we all know how important that last minute on the 5 is, right? Well, that plays a big role in the 4 minute time frame. Our risk is much lower using the 4 minute time frame. There's, like I said, I'm still doing a lot of studies on it, but as of right now, I'm pretty confident that the 4 minute is extremely effective. But basically, we have a 3-step approach, right? Why is that important? Well, because I need something to keep me disciplined and patient. Most traders I coach, they're constantly like, dude, I have no discipline. I'm like, yeah, that's one way to look at it. Another way is you don't know what's best for you. You don't have a strategy you trust. If you did, you would wait for it. If you trusted your girlfriend, you wouldn't feel the need to get another one. You see what I'm saying? Like if you actually trust and believed in your strategy, you would only trade your strategy. That's where we need to get you. It's not that, and yeah, you also may have discipline issues, and you also may have low self-respect for yourself, and that might also be why you don't respect your strategy. But those are things that we cover in in HPT. But basically, you need to build self-worth in the market, and the only way to do that is by believing in your strategy. So this is our strategy. This is what we've collected a year of data on and gives us an 80% win ratio. So basically, this is what I look for every day. Open print, moving average cross, RBI. Look at this, guys. Open print or critical level, right? Critical level. So right here, critical level. This is step number 1. Step number 2 is moving average cross, okay? So once again, we are relying on the moving averages. We're not relying on our gut. We're not relying on, Trump's going to talk in a little bit, or, CPI is out, so we're not going to, no, none of that. We are relying on our strategy. Our strategy is backed by data. Your gut is not backed by data. Your gut has costed you your dream thus far. So maybe we should stop listening to our gut and maybe we should start trusting our tools. Okay? So critical level, moving average cross, you guys know it. RBI, bam, in the market long, boom. So anybody that wants a free mini course on our strategy, put your first, last name, email in there. Get affiliated with HPT. I break down all the concepts in Trader Bootcamp as well. So take a look at that. Very effective. Only taking 10 traders this month. And then at the end of the month, we're actually done with Trader Bootcamp. I'm repackaging everything. I got a lot more to offer you guys, and it's coming quick. So be ready for that. So once again, guys, like there's really not a lot to go over here on these 2 trades. But the biggest thing, and that's how it should be, right? It shouldn't be retardedly complicated. Like you shouldn't have to, have 8 different stars that need to align for you to get into a trade. You should literally just be able to watch buyers respect a moving average and get in it. If your context reading ability is good enough, that will work for you. So we went long right there. You'll see in the Discord here, I'm like just going crazy. I'm like, dude, all right, treating this one like a scalp. And then right now, the one thing I want to talk about, right, real quick, we get in here, okay, right here. We're in the market. Bam, we're in long. We're targeting this right here, 64157, right? What happens right here? This is where you're tested. But once again, I don't need to rely on my emotion. I just need to watch what happens at that moving average. Boom. Massive fake out right here. So in the Discord, I'm like, guys, this is where our stop loss goes, right? Below there. Let's see if buyers can hold. What happened? This is SPX chart. Look at this. Bounce, bounce, bounce. So once again, instead of assuming it's going to reverse, instead of going, oh my God, what if it goes against me and all that other retarded shit that we tell ourselves, listen to the moving average, man. The moving average is going to tell you in the present moment how strong are buyers. It doesn't always work, but when it does, it works. Okay. So once again, it doesn't need to be all the time, but when it is working, you should definitely use it. That was a great trade. And I decided I was going to go out on a limb right here as well. But once again, I was just following my strategy. Okay. We have an RBI. And on the 2-minute chart, you're going to see here, I did use the same principles, but just with the 50 EMA. Once again, this is why moving averages will change your life. Okay. It doesn't matter which moving average you're using. What matters is your ability to use it correctly. How? Well, you go moving average. Who currently has the ball? Does the green team have the ball or does the red team? How do you know? Look at the previous score. Okay, look, buyers are holding it here. Hold on, Josh, when you say buyers are holding it, what are you talking about? We literally got an RBI off the 50. What does an RBI mean? Dominant. Okay, when you see an RBI, believe whoever showed up and performed that RBI or GBI is dominant over the opposing side. Okay, so once again, RBI, clean bounce, 4-minute time frame, red bar ignored. So now I have a spot to put my stop loss. My stop loss goes right there. Bam. Josh, what's your target? High of day. Boom. Simple trade plan. What's a trade plan? A trade plan is knowing where to get in, where to get out, and where to target. That is a trade plan. You need all three. And that's what we got. Great trade. We did great. We had a really good day. And it wasn't nothing like crazy. I think that's what's most important to touch on is like, it's not like, like look at this chart. This is literally all we did today. Not crazy. Just sticking to what works, right? Like your moving averages need to be your guideline. Don't take my word for it. Look at your data, look at your trades, and just try it. Throw all your other nonsense out tomorrow and go, who's actually respecting that? And maybe just make the decision based off who's respecting the moving average. And Todd, 100% right. Todd said, very repeatable. Yeah, absolutely. And what's important to talk about is what's not repeatable. Our gut. Like, our gut feeling is not repeatable. And shit don't work. But when price is respecting the moving average, you're good. So great session, guys. Great recap. I love you guys. I appreciate you guys coming and showing up. We're trading live Friday. Y'all already know it. We're gonna have a great day. Today was a good day. And before I get off, I just want to tell you guys, put yourself in a hard scenario, right? Like push yourself. Try something different this week. Like make it uncomfortable. And that's where your level up is. Sparky, I love you. Todd, I love you. All other HPT members that are watching this, I love you. If you're not an HPT member, join the motherfucking team and make the decision to level up because we're taking this straight to the top. I love you guys. Peace. Bam.